Good Monday morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitinn, and Managing Director of International Content, Emily Parker. Good morning. Happy Monday, you two.
Good morning.
ETH had a pretty good run-up over the weekend. Taking a look at that.
It did indeed.
But checking in on Bitcoin, the CoinDesk Bitcoin price XBX index is currently trading at 58,582. Bitcoin's doing pretty well, up about almost 3% over the past 24 hours. And the CoinDesk Ether price ETX index is trading at 3148. ETH is up about 7.5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So, Lawrence, ETH all-time high, over 3,200. That's the story over the weekend.
Indeed. Yeah, I mean, I could imagine all the Bitcoiners are looking at this and they're like, Ether, 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 you know, like Marsha, because I mean, Bitcoin is like close to 59,000. It did okay, 3% in the past 24 hours. But ETH, wow. I mean, that thing went up. It's the highest of the CoinDesk 20 percentage-wise today. So it's at some 7% up in the past 24 hours. And what's interesting about this particular rally, as Cargo Boli points out in his piece this morning, is that it's not derivatives driven as much as it's spot driven. So it's the spot market, the equivalent cash market. People are buying actual ETH. They're not buying. They're not leveraged. It's not 100 to 1 like you see often in Bitcoin. So you're also seeing, though, in the derivatives market, you're seeing $5,000 strike calls, which is a bullish view that ETH will hit $5,000 at expiration. You're starting to see action at that $5,000 strike. And Vitalik is a billionaire now.
Vitalik's a billionaire. You know, but Bitcoiners have another bone to pick, and that's with Charlie Munger, who had some comments calling Bitcoin disgusting over the weekend. Charlie Munger is the vice chairman of Berkshire Hathaway, of course, and he was speaking at their annual meeting on Saturday. What did, the response was pretty not so great on Twitter, would you say, Emily?
Yeah, that's probably putting it mildly. I think, to put it more accurately, people basically freaked out. So, as you said, yes, he called it disgusting. He seems to think that this money is just kind of created out of thin air. He clearly doesn't see it as a relatively new form of currency, which it is. But once he said this, yes, crypto Twitter basically reacted very strongly. And there's all these memes and there's all these insults and there's all this anger. And what's kind of funny about it is that Warren Buffett actually declined to comment on Bitcoin, saying that, it just basically wasn't worth it because he was going to piss off hundreds of thousands of people. And it turned out that, he was pretty right about that. So I think Warren Buffett made the right call in not commenting on Bitcoin.
You can't mock people's religion. And in this case, Bitcoin is their religion. And it gets people very upset to tell them that, there might be other things happening to explain the world. But Bitcoiners are particularly, they're very sensitive and you have to deal with them gently. Because their feelings get hurt.
Okay. Well, looking at our next top story of the day, Accenture is partnering up with the Digital Dollar Foundation to launch a series of pilot programs over the next 12 months to explore and inform the future design of a U.S. central bank digital currency, or digital dollar. This is unrelated to the Fed, but an independent project. Joining us now to discuss is Accenture Senior Managing Director David Treat and Digital Dollar Foundation founder and former CFTC Chairman Chris Giancarlo. Welcome, Chris and David.
Nice to be with you again, Christine.
Always a pleasure. So Fed Chair Jerome Powell has said the U.S. Central Bank is exploring the creation of a digital dollar. Tell us about these pilot programs your partnership through the Digital Dollar Project is launching. Give us an example of what it will look like, who will be using it, and how it will work.
Well, maybe I'll set the stage and then ask David to talk to you a little bit about specifics. We launched the Digital Dollar Project in January of 2020, 16 months ago, and our mission really was to advance, to advocate for the advance of U.S. exploration of this new technology in the form of central bank digital currency or what we call the digital dollar. And in that time, we've put together a terrific advisory board across the political and intellectual spectrum with advocates for financial inclusion and economic privacy, as well as those from central bank backgrounds and commercial bank backgrounds. We put out a white paper at our website, digitaldollarproject.org, last spring. I had the honor to testify in front of Congress 3 times last summer. And pursuant to one of those conversations with the Senate Banking Committee, we put out for public consideration 9 proposed pilot programs that we think are an important way for the U.S. really to take this exploration to the next step. And we've decided over the last few months to actually put our time and our money where our mouth is, to actually put those pilot programs into effect. And with the help of Accenture, we're going to do just that. And that's what we announced today. And I'm going to ask my colleague, David Treat, to talk a little bit about some of those pilots.
Yeah, thanks, Chris. We actually formed our blockchain practice back in 2015 off the back of our very first client being a central bank. We've been working with central banks around the world for since then. We've actually at this point supported the majority of the G20 central banks. And so not only is there a global body of knowledge and experience around the world, the BIS report of the fact that 80% of the world's central banks are on this journey, we're very excited and eager to bring that global knowledge base through a dedicated team that we have. It's run by a guy named John Velisarios on my team, wonderful team that's focused on central banks around the world. But as Chris said, we haven't had the dialogue and the experience from a U.S. context. We're excited to bring that global experience to bear in the U.S. context. And we also have the huge advantage of a phenomenal number of private party exercises already underway on a stablecoin construct that can provide a basis for those pilots. So we've got, as Chris said, we have 9 different pilot use cases that were proposed out of the congressional testimony last summer. Those are our starting point, and they range from financial inclusion use cases all the way through commercial banking and core capital markets.
So David, could you give us some specific examples of how those use cases will look like? Who will be using it and how will it work?
Yeah, so there's going to be intentionally a variety of different types of use cases, again, to address the entire spectrum of how a CBDC can be applied. So on the financial inclusion side, we have enormous banking deserts here in the U.S. where there isn't a bank for 200 or 300 miles around, and the whole notion of can the combination of digital wallet infrastructure and digital identity provide an easier access point to those that are unbanked or underbanked right now than the incredibly expensive ways that these people are forced to be able to participate in online commerce in our financial system. And so some of the pilots will focus specifically there. Some will focus on the urban setting, all in different combinations of partners that we'll need across the retail banking, commercial banking, private enterprise perspective, informed by the public sector needs and demands. And so we'll have use cases focused on that area, and then use cases at the other end of the spectrum where there's already work underway as to how a central bank digital currency can underpin the future of core capital markets infrastructure, that direct exchange of a tokenized asset versus tokenized cash, or the cross-border payments infrastructure is another great example, in our remittance infrastructures. So what we'll see is a combination of parties coming together to be able to support the different aspects of each use case, and each being unique and very focused, all contributing either time, resources, money to be able to get to a point where we can generate insights, and then we're going to share that with the widest possible stakeholder community.
This is a very exciting project. This is a question for David. Nice to see you. So I can imagine some people having some issues with this because they're going to think it's going to be some sort of invasion of privacy, right? Because obviously this is a less private form of currency than is cash. And you know that Americans value privacy a lot. And are there any privacy concerns here? And also, how do you sell it to the public? Because, this idea that, the government somehow has some visibility into how you're spending, there's definitely going to be a lot of Americans who are not going to be comfortable with that.
Well, I think that's the specialness of what we have, the opportunity we have in front of us is the technology is enormously configurable to meet the, what we choose, for our societal values and our, certainly privacy has been long held as a tradition at the heart of our financial system. And so the ability to configure the technology to meet those demands of society, I think is the incredibly interesting work ahead of us. The technology does afford the ability to have both, that ability to have a set of government ordained actors, regulated actors operating the node infrastructure, limited by the Fourth Amendment around access to that data and its use without warrant or just cause and legal due process, and otherwise having no visibility into those transactions as one of the possibilities that the technology affords, where we can have this and we can adhere to the existing construct where under $10,000, all transactions, in physical cash can be entirely private. You don't need to identify yourself, and above which can trigger the appropriate financial crime management constructs. So, I think it's an incredibly important area of focus. We're doing a lot of work around the privacy space and the implications. There are, this community will certainly appreciate just the amazing potential that's part of this technology around privacy preserving compute and the ways that we can protect data in these systems to modernize our systems in a way that's comfortable for everyone.
So,
if we share the view that the future of money is digital, whether that be sovereign money or non-sovereign money, then the issue of privacy is so critically important, right? We're watching the rise of a digital yuan, and there's no question that that's going to be part of China's social surveillance and their social credit system to monitor economic transactions. We in the West have a long tradition of economic privacy from government surveillance. It's written into our Fourth Amendment, and in Europe, they have their GDPR protections for individual privacy. And so the debate today is being waged globally between the democracies with long traditions of privacy, economic privacy, social privacy, and the non-democracies. And our whole initiative is geared toward pushing the United States to a leadership role in that debate over the future of money and what values are going to prevail. Are they going to be traditional values of individual privacy that have long been the norm in the West and in democracies? Or are they going to be the values of social credit scores and social surveillance? That really is the core issue, and that's really why we feel it's so important for the United States and the other democracies to assert leadership in this new technology and not allow our non-democratic economic competitors to dominate the value setting, the rules, the protocols, and where the digital future of money is headed.
So, Commissioner Giancarlo, welcome back. Of course, you're I think one more appearance, you become a co-host. So, my question,
or at least I get flyer miles or something like that.
Yeah. I think we have a punch card, and the fifth one you get a coffee.
Right.
This is so. One question, of course, coming back to it is, how does it actually work? Can I apply for it and say, hey, I want to be part of this program? How do you select the people? And where do they use those digital dollars? And can they use those digital dollars anywhere? If they can't, wouldn't that affect their ability to grow it?
One of the reasons we're so pleased to be working with Accenture is because they're involved in the majority of pilot programs that are taking place around the world with different central banks. And so they've got experience in setting up these programs. And it's going to be an important part of this as to deciding who to work with, what the different programs are. But everything we do, we're going to make publicly known. It'll be on our website, as we've done so far. Our 9 proposed pilot programs are already there. And so we're really looking forward to doing something that's actually relatively difficult for the central bank and for government to do, and that is to work with the private sector, both commercial and non-commercial entities in the private sector. And we're delighted to have David and his team to help guide that process.
Chris, do you have any connection or communication with the Federal Reserve or Jerome Powell while you conduct these pilots?
So it's been our process from day one of the Digital Dollar Project to keep the Federal Reserve and the administration, the previous one and this one, apprised of what we're doing. We've had the pleasure to present to staff members of the Federal Reserve Board, to present to federal bank presidents that are looking at this, and we'll continue that dialogue as we go forward.
So you mentioned Chris, you mentioned the central bank digital currency, China's central bank digital currency. Is this digital dollar going to have any use cases internationally? What is the vision for it internationally?
Absolutely. David, maybe you can talk a little bit about that. It's a very important part of what we're going to do.
Yeah, the U.S. dollar is the world's reserve currency and used globally in our global financial ecosystem. Cross-border payments is one of the key use cases that we are eager to test from the U.S. perspective. It's being tested already in lots of other contexts. If you look up, as a great example, the first instance of central bank to central bank exchange of fiat currencies in the Project Jasper Rubin or Rubin Jasper, depending on which country you're sitting from, between Singapore and Canada, was a great first example. And so there is a active dialogue underway as to how does central bank digital currency work on a cross-border basis. We're at the beginning of those prototypes and first use cases and experiences, and having the U.S. participate directly in that dialogue we see as critically important. As of course, being the world's reserve currency, it's going to has to play a role. I think both Chris and I fully share the views that Chairman Powell expressed last week that it's much more important that it be done right rather than be done first. And so getting these pilot programs going now, starting to develop that experience and look at the models by which that will operate is central to what some of the pilots will be about.
Yeah, David.
Emily, there's not a week that goes. Christine, sorry, there's not a week that goes by these days that there's not another conference or a series of papers delivered on the prospects of central bank digital currency. But what's missing is some real data and empirical data analysis coming out of a U.S. context, coming out of a dollar-based context. There's data coming out of Europe. There's data coming out of Canada. There's data coming to Singapore. And, of course, there's stories coming out of China. But what we really don't have is real U.S. testing and data generated from that in order to inform the conversation about a digital dollar. And so that's what we really hope we can contribute is pilot programs and then making all that information publicly available to the Fed, to Congress, to the administration, to academics, to others who are involved in the debate. The debate is in the early days of whether the U.S. actually launches a digital dollar. But what we really need right now to inform that date is real pilots so we can really see some results from that. And that's how we're going to contribute to this public conversation.
And we're looking forward to seeing that data as it comes. Chris and David, thank you so much for joining us this show.
Thanks for having me with you.
All right, that was Accenture Senior Managing Director David Treat and Digital Dollar Foundation founder and former CFTC Chairman Chris Giancarlo. Coming up, the latest developments out of Asia and market analysis with crypto trading and investment firm Crosstower. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, May 3rd, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News. Let's get you up to speed from Asia to the world. Ethereum breaks 3,000. The king of DeFi is still reminding us it's the world's dominant smart contract network, growing to now 15% of the total crypto market cap. After an initial spike following the Berlin hard fork, fees in the Ethereum network have been significantly lower in recent days. That's also in part thanks to the help of layer 2 scaling solutions such as India-based Polygon. Polygon's cryptocurrency called Matic is up by more than 120% over the last week. Industry analysts like AAX head of research and strategy Ben Caslin says Ethereum's high gas fees and the rise of alternatives such as Binance Smart Chain led to a loss of investor confidence in Ethereum. But recent developments are shifting this narrative. He points to central banks leveraging Ethereum blockchain in several CBDC initiatives in Asia and the recent digital bond sale using Ethereum by EU's lending arm, the European Investment Bank, to issue $121 million in 2-year digital notes. Meanwhile, Bitcoin's market dominance is weakening to about 46%, but its price remains strong, up 3.9% in the last 24 hours. Uniswap up by another 11.7% ahead of its V3 upgrade this Wednesday. And of course, Ethereum at an all-time high of over $3,100. All right, let's take a quick look at the Asian equity markets for you right now. Most of the market in red today, but Australia's ASX 200 is up 0.4%. And in South Korea, more insights on how one of the most mainstream crypto countries is evolving its view. When asked what people think about the new tax on cryptocurrency gains was, according to a poll conducted by local media, interestingly, 53.7% say crypto should be taxed, while 38.8% say no. And surprisingly, investors in their 20s are virtually split. So why in the world would anyone want to pay more taxes? Well, some insights now from Professor Kim Byung-jun of Korea's Dankook University Law School, who favors taxing under one condition: investor protection.
눈 감고 있을 만한 정도의 수준은 이미 지났다고 생각이 되고요. 그렇기 때문에 오히려 더 선의의 투자자를 보호하면서 이런 가상자산 시장의 선기능이 보다 좀 더 합법적으로 양성화되어서 발휘될 수 있는 그런 정책적인 그런 시각의 전환이 좀 필요한 시기가 아닌가 그런 생각을 하고 있습니다.
Over in India, as COVID cases continue to climb, help coming from the industry. Binance Charity Fund is sending $200,000 worth of oxygen connectors to India. CZ joins ex-Coinbase CTO Balaji Srinivasan and Polygon co-founder Sandeep Nalwal, along with Vitalik Buterin, in donating to global efforts to aid India's COVID crisis. Though it may be a hurdle, as India currently does not have regulations on cryptocurrencies, outside donations may trigger foreign exchange flags. Still, help is help, and here's hoping India gets as much as it needs. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Forecast Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, Bitcoin in rally mode. The CoinDesk Bitcoin price XBX index is currently trading at $58,500 and about $30. Bitcoin is up about 3% over the past 24 hours, and the CoinDesk Ether price ETX index is right now trading at 3,122. ETH is up about 6.7% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. And joining us now to discuss the crypto markets is Martin Gasper, research analyst at Crosstower, a crypto trading and investment firm. Good morning, Martin. So,
hi, Christine.
Great to have you. I'd love to hear your Bitcoin outlook. We've seen it just shoot up over the weekend since Friday, and also ETH at an all-time high.
Yeah, it's all really interesting developments on the Bitcoin front. Seems to be more organic buying this time around versus the last couple of weeks. Seems to be that leverage has been largely flushed out of the system with the two dips over the last few weeks. We see that with open interest being lower and funding rates being more neutral than with some of the peaks we saw before. On the what the on-chain data is showing is that long-term holders continue to be scooping up Bitcoin And we also see that investors continue to withdraw Bitcoin away from exchanges. And we see this in outflows from exchanges like Coinbase, according to data from CryptoQuant. So it's all really interesting on the Bitcoin side. With Ethereum, I think we're seeing there's just a lot of renewed investor enthusiasm. I think this is largely in part from excitement around EIP 1559, which is slated for July to be part of the London hard fork there. But basically, investors are just starting to digest the potential impact on the economics of Ethereum. With a portion of the transaction fees being burned as part of the proposal, this could lead Ethereum to become deflationary, which could be groundbreaking for its potential valuation.
So, Martin, but why did ETH happen all of a sudden, so to speak? Why did we see these sudden big moves in it relative to Bitcoin? Was there any specific catalyst, or was this just a long-term excitement building up over the update?
Yeah, I think specific catalysts were largely, a lot of core DeFi projects launching on layer 2s, such as Polygon. We had Aave start a liquidity mining campaign a couple weeks ago, and this really incentivized users to deposit and use Polygon. And so now you see Polygon has over almost 2.5 billion of TVL on it, with Aave having most of that. So I think it was this validation of L2s because of Polygon, right? Because of the initial success, that people started believing more in the future of Ethereum. I think, in the last few months, the high gas fees really caused investor concern, where there was uncertainty, how long it would take Ethereum to fix some of its congestion and high fees. So I think having all of these users and deposits on Polygon really bode well for the future of Ethereum. And I think investors are reflecting that in the price.
So how high do you think Ether can go in the next few months?
Yeah, I think it's going to continue to gain, assuming that, demand for DeFi continues to grow. I think a lot of people, they always look for the flippening. I don't know if this is going to happen in the next few months, but certainly over the next couple of years, I think it's possible where the market cap of Ethereum could overtake that of Bitcoin, because you have really kind of two forces in play. Bitcoin is primarily for payments and a store of value. Ethereum is for decentralized applications. So really, the use cases for it, in my view, could be far greater than that of Bitcoin. So I think as more investors, especially institutions, kind of begin to understand Ethereum more, I think that's going to be reflected in the price.
Yeah, but key difference, ETH has, could have unlimited supply. But Martin, thanks so much for your analysis on the crypto markets.
Great, thank you for having me.
That was Martin Gasfer, research analyst at Crosstower. Coming up, Alchemy, the Amazon Web Services for a blockchain, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
We are witnessing the greatest paradigm shift in finance in modern history. Join thousands of newsmakers and influencers talking the future of money in a live virtual experience. Consensus by CoinDesk. Register today.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's State of Crypto newsletter. Hello, Nick. I hear you have an ETF update for us.
Hey, good morning. Yes, today is the formal deadline for the SEC to make an initial decision on the Van Eck Bitcoin ETF. Of course, the SEC did make that decision last week. It's pushing, any further decision making to June, but it's a first sign. There are now several ETFs that are being, reviewed by the SEC, so that process is well underway. And the next deadline we're looking at is a comment deadline on May 6th for the Wisdom Tree ETF.
So, Nick, that delay was, to get it straight now, the delay with the initial comments, that's Can you explain that and what today is versus that exactly?
Yeah, so when the SEC approves an ETF, there's a process by which companies can apply, and the SEC has the ability to delay any decision by up to 240 days, or it gets a total of 240 days. So typically with Bitcoin ETFs, the SEC has taken as much time as it possibly can to make a decision. And so the delay on the Van Eck ETF isn't a surprise. That's pretty much exactly what everyone expected to happen. My guess is the SEC will continue delaying that decision until it comes near the end of its 240-day deadline. In order to make that decision, though, the SEC does solicit public comments from anyone who wants to weigh in. So anyone who is interested and has a view can publish a comment to the SEC saying, hey, I support this ETF application, or hey, I do not support this ETF application. Here's why. Comments have gone from being, very informed and informative and detailed to, just some people saying it's about time, please approve this. So you have the full range right there. So the way that works is, the SEC will give you like 3 weeks to comment and then 2 weeks to reply to a comment before it makes that initial decision. On May 6th, that first 3-week period for Wisdom Tree's ETF will end, and people can look at those comments and maybe reply, and the SEC will review those comments before making its initial decision in a few other weeks.
Hey, Nick, real quick, what do you think is the significance of the digital dollar project that we discussed earlier on the show?
Yeah, that's interesting. The fact that they're moving to a pilot phase where they can actually test some of these in real world scenarios is, I think, a interesting sign. I spoke to David Treat last week ahead of this, and his view is that they're going to try and make these as close as possible to the actual real world scenarios in which they'd be used. Although, of course, it wouldn't be a Federal Reserve issued dollar, so it's not technically going to be a digital dollar, but he said that they're hoping to try and get them as close as possible to get some genuinely useful data to either send to the Fed or to work on when they're trying to draft out what an actual final digital dollar might look like.
Definitely interesting developments. Thanks, Nick, for joining us this morning.
Thank you.
All right, that was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Alchemy, the Amazon Web Services for blockchain, closing an $80 million funding round at $500 million valuation. Alchemy powers most of DeFi and almost all of big NFT platforms. Joining us now to discuss is Nikhil Viswanathan, co-founder and CEO of Alchemy. Welcome, Nikhil.
Hi, thanks for having me.
Good to have you. All right, so the funding round in Alchemy represents some of the larger blockchain infrastructure bets in recent memory. Can you explain to us what Alchemy offers and who some of your clients are?
Yeah, absolutely. So when you think about the traditional internet, Amazon Web Services. So actually backing up a little bit, Amazon has two businesses. One is their shopping business, and the other one is a service called Amazon Web Services. Amazon Web Services powers the back-end technology behind most of the companies that we use in daily life. Uber, DoorDash, Airbnb, even companies like Netflix. And every time you open Netflix, it's actually using Amazon's technology under the hood. And that business actually represents 2/3 of Amazon's total profits. Alchemy does a similar thing for crypto. We power most of the large entities in space. Anytime you open one of the crypto apps, you're actually using Alchemy's technology under the hood that enables those apps to connect and read and write from the blockchain.
So are you running data centers around the world as well?
We have a few different layers of infrastructure. Primarily, we're a software company, though.
Okay. And what differentiates you from competitors like Infura, which is owned by Consensus and Truffle?
One of the reasons that Alchemy has been able to grow so quickly is we're the only company that provides a comprehensive developer platform, which involves infrastructure and the developer tooling. Imagine you're trying to build a building and you have really primitive tools like a hammer and a chisel. It would be really difficult for you to build anything more than a mud hut. But once you have the professional construction equipment like bulldozers, cranes, these kind of things, you're able to build skyscrapers. So the way we think about our business is enabling developers to build the products that will push the ecosystem forward. And Alchemy is that comprehensive platform that allows them to do that.
So AWS, I think you could argue, is a bit of a, like that comparison is a bit of a double-edged sword, right? Because, I think many would agree that AWS enjoys disproportionate influence and power in the conventional internet world. And sort of the whole idea of Web 3.0 is to create a new environment where there isn't this one player that, is really powering so much of the infrastructure. Is there any danger that you could start playing a similar role in the blockchain world?
Yeah, that's a great question. When you look at something like AWS, they have complete control over your data. They can shut you down at any time. And that's a very serious thing. As we saw, they shut down Parler, which was one of the top apps in the App Store, and it's just gone 24 hours later. One of the really nice things about blockchain and decentralization is that's not possible. So when you look at something like Alchemy, we don't control anyone's data. We just provide an access mechanism to the blockchain. And if we were to leave, everything would still continue the same and people could access their data. So luckily, this is not a bottleneck in the same way that AWS is for the traditional internet.
So Nikhil, when you say that you have a large market share, a majority market share in DeFi, what percentage are we looking at?
It fluctuates based on the day, but typically it's about 60 to 70%.
And that's 60 to 70% in terms of assets or in terms of...
yes.
Okay. Yeah.
In terms of total value locked up.
Okay, and when primarily somebody's using it in DeFi, how are they obviously don't know that they're using Alchemy's backend when they're doing this, correct? Yeah, I mean, it's the same way you can think of every time you open Uber, you're not consciously thinking, oh, I'm providing Amazon some revenue. Similar when you use DeFi products or NFTs. So one of the things we do is we power pretty much every single large NFT platform, whether it's the $69 million Beeple sale or Patrick Mahomes sale or whatever it is. All those transactions run through Alchemy.
So if my understanding is correct, one of the reasons for the rise of middleware is because blockchain technology is not accessible to a lot of people. And so this is like one way to kind of make it more widely accessible and get other people to access the technology. Is that kind of a sign of the immaturity of the industry? Like, could we get to a point where Alchemy is no longer necessary because people are actually able to do these kinds of things themselves?
That's a great question. The way I would think about it is anytime you have any industry, you need to enable people to build applications, right? When you look at the computer industry, you have this fundamental hardware, you have this RAM, your CPU, your hard drive, and those are the components that make up a computer. But you couldn't build applications like Microsoft Word or Excel or Google Chrome until you had the operating system. Because what the operating system does is abstract that underlying technology and make it easy for developers to build applications. So I don't think it's a sense of the immaturity of the industry. It's a sense of this is the basic toolkit. When you think about your job on a daily basis, what are the tools that you use? Zoom, email, Google Docs. That doesn't mean the reporting industry is immature. It just means that these are the fundamental tools you need to build your business. And when you think about developers building applications, there's a similar thing in the blockchain industry where we provide the basic tools and infrastructure that they need to create great products that are used by millions of people around the world.
So Nikhil, what do you see coming up in the future, for instance, in the DeFi space, and as well for your company? Are you planning on going public?
Both great questions. One of the really exciting things is we're seeing, because Alchemy is an industry or vertical specific platform, we see growth across all different industries, both DeFi, both NFTs. One of the most exciting things for me personally is seeing how the mainstream industry adoption is really taking off. So when you look at large banks, I can't name any of them by name, but when you look at some of the large banks, some of the large financial institutions of the world, maybe they dabbled in 2017 in crypto, but now they're coming in really seriously and having whole blockchain divisions saying, hey, we're going to really, really build and invest in this type of new infrastructure. So seeing the large institutions gives me a lot of hope that the non-crypto part of the world is adopting this new technology extremely quickly. And in terms of the IPO, we are growing very fast. Just in the last couple of months, we've 10x'd our business, but hope to stay private as long as possible before we have to go public.
All right. Very exciting developments on your front. Thank you so much, Nikhil, for joining us.
Thanks for having me.
That was Alchemy co-founder and CEO Nikhil Viswanathan. Time now to check in with crypto Twitter with our tweet of the day. This one from Bitcoin hodler Nathan Butler saying, Charlie Munger and Warren Buffett on Bitcoin make me think of these two. Ladies and gentlemen, the intellectual might of crypto Twitter. That's it for First Mover. Thank you, Emily Parker, our CoinDesk Managing Director of International Content, and Lawrence Lewitinn, Managing Editor of Global Capital Markets. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.